Do you know what investing is? Not sure if you should start investing or not? Is it too much of a risk? You may have heard from many people that say you should start investing. And on the other hand, you may have probably come across people that are telling you it's a load of garbage and it doesn't work. We're here to give you some information so you know the next step to take and make a decision for yourself by the end of this video. This is Top R Worldwide, and we help teach people on two of the most important factors of life: health and wealth. We are also going to take you on a journey to help you reach your full potential. If you are interested in becoming the best possible version of yourself, make sure to subscribe to the channel and like the video if you find it helpful. So why are you here? You want to have money, and a lot of it, right? You're hoping for an easy way to the top. This isn't going to be a video where we say how easy it is. Just like everything in life, nothing is easy. But don't give up on it yet. It's not all doom and gloom. Investing has become massively popular in the last few years, more than ever before. Investing is different from saving. Investing is when you buy assets with the hope of them rising in value over time. You will need to understand when investing, a low risk generally means low returns, whereas a higher risk taken usually results in higher returns. If investing is for you, you will need to be prepared to have some losses as well as earning big. Let's go through some types of investments you have. There's stocks and shares investment, bonds, funds, and investment trusts. Investing in shares is effectively becoming a part owner of a company. The bigger the investment you make, the bigger your stake will be in that company. The difference between a stock and a share is, with a stock, it is a financial instrument representing part ownership in a single or multiple organizations. A share is a single unit of stock. Many companies issue common stock which is divided into shares. For example, say a company issued stock and you purchased 10 shares of it. If each share represents 1% of ownership, you own 10% of the company. The company issued stock and you bought shares of it. A brief description of bonds investment according to the web is: bonds investment are securities where an investor lends money to a company or a government for a set period of time. The investor receives regular interest payments and gets the money back when the bond reaches maturity. When you invest in a bond, you are essentially loaning your money to a government or company that needs to raise money. In exchange for lending your money, you receive regular interest payments. Once the bond reaches maturity, the bond issuer returns the investor's money. The difference between a bond and a stock is with a stock you have no return guarantee, but with a bond you are guaranteed a return. Funds are our collective investment, where yours and your investor's money is pooled together and spread across a range of investments. This is helping you spread your overall risk. The value of investments can fall as well as rise, and you could get back less than you invest. Essentially, your money is spread across dozens and hundreds of different assets across the world, with the fund manager doing all the work. The fund manager decides what to invest in and changes the holdings where necessary. In exchange, you pay them a fee. You make money when you sell your holdings in a fund and from dividends, though dividends can be also reinvested. You could pick shares yourself and avoid paying the fund manager a fee, but that requires time, effort, and knowledge in areas you're invested in. Investment trusts. So what is an investment trust? An investment trust is a public limited company that aims to make money by investing in other companies. Owning shares in an investment trust is a way of investing in a variety of different companies. Like all funds, investment trusts can rise and fall in value. When investing, people don't often choose this way over the other types of investment. There are trade platforms that are well known, such as Vanguard, SigFig, Future Advisor, Wealthfront, and Betterment. There are a lot of pros and cons for these, so if you are thinking about investing, maybe have a look. In terms of pros and cons for the main type, which is stocks, here's a few you should know about. Pros: advantages of growing economy, effective way to stay ahead of inflation, and simple to buy. The cons is monitoring a time-consuming process, ordinary shareholders are paid less, and risk and tax. So overall, to sum this up, should you start investing? Yes. If you do your research, focus on what you're doing, and prepare yourself for gains and losses, then investing could be for you. It doesn't take massive amounts of money to start. However, if you're wanting to get rich quick, there's no guarantee. Patience is key with investing. It's a massive risk and doesn't always work for everyone. If you really want something, you should go for it. Stay tuned for an in-depth look into experiences and opinions on investing and all the pros and cons for certain types. Would be much appreciated if you could like and subscribe for more content on health and wealth.